Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. In fact, from here, all these previous rejections to the upside have been created. So every single time that the market tested this zone, it at least reacted to the area. And what we can notice here is that the market is currently testing the exact same zone, has already started rejecting it to the upside. So in a situation like this, there is the possibility of seeing more bullish continuation being created away from this area. So the monthly time frame does seem quite bullish. We can also notice that from a pattern standpoint, we have a clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements right here, which are also lining up perfectly with this previous level of monthly support and demand from which this push to the upside started. This means that since we have multiple layers of support in the same area of price, so the Fibonacci levels and the previous support that is currently still acting as support, this means that essentially we have a confluence of support zone. And inside of a confluence of support zone, there is an increased probability of seeing institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So the monthly time frame at the moment does seem quite bullish. So let's keep that in mind and move down on the weekly time frame. Here on the weekly, what we can notice is that we just had the creation of this strong impulse to the upside, and currently the market is already following with a correction. And in general, after an impulse, if you want to measure the correction, as we just did also previously, we have to measure that correction by taking a Fibonacci from the low to the high, which shows us how we have a 0.32 and 50% retracements lining up exactly at this zone. Now, this creates support at this level that the market has the possibility of potentially rejecting to the upside, especially if we will see some institutional longing inside of the zone. And we will be speaking about institutional longing in just a few minutes when we move to the analysis. For now, let's drop down the daily time frame and see what we have. Now, from a daily standpoint, if we are to identify the pattern that we have here on the daily, we have to notice how increasing this push to the downside, the market has just created this M pattern. And in general, after the creation of an M pattern, as explained many times, we have a good probability of seeing a rejection to the upside, completing the M pattern at the neckline, which is the previous support turn resistance. In fact, that is how most of the times the market reacts to such a price action. And we can notice how here, for example, we had this M pattern, and in fact, the market from here created a push to the upside and completed the M pattern at the neckline, as you would usually expect in a situation like this. So there is a possibility from here to see some bullish price action, at least for the completion of that M pattern at the neckline. Let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing precisely on the euro. Now, the first thing to keep in mind is that if we're looking at the data for the euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And we can see how with the last reports, net positions have been increased. We went from having minus 9.5k net positions up to plus 24.7k net positions. This shows how institutions went from having more shorts than longs to now having more longs than shorts on the EURUSD. So completely the opposite scenario, therefore making it stronger. And in a situation like this increases the probabilities of seeing a potential rejection to the upside away from this zone. And by the way, if you still haven't, make sure that you go and check out my free Telegram channel, which you found both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. So in a situation like this, where institutions have been moving to the bullish side, we have a bullish pattern on the on the daily time frame, which is this M pattern, and on the monthly, we're testing a strong historical support and demand area. What would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so for hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.